USDJPY has started to dump. Gold continues to fly into new all-time highs on a daily basis, and EURUSD suddenly pushes as well with over 300 pips or 200 pips within just 2 days. Now, what is the reason for all of these big moves? Well, it's these major headlines, guys. The Japanese bond crash unleashes a $7 trillion risk for global markets. So what is happening in Japan at the moment? Well, yields, or let's say returns and interest rates, are starting to go up higher and higher, where in the past, interest rates and yields in Japan were, let's say, near 0%. What did people do? They borrowed for 0% and they would invest in, let's say, the United States for 5%. However, this relationship is starting to vanish, causing a lot of people to start unwinding risk, and they're starting to do what? They're starting to buy the Japanese yen back. Furthermore, also we have currency intervention, which is a massive risk. So in the past, what you can see, especially on this chart over here, is that when USDJPY goes too high, we see these massive turnarounds where the Central Bank of Japan starts buying the Japanese yen itself, just to prevent the currency from devaluating against, for example, the US dollar too much. So what we're seeing is already talks of a potential drop on USDJPY, which is purely fundamental and based on what the central banks are going to be doing. And furthermore, again, we can see here more information about the dollar dropping on yen intervention risk. So all of these headlines are causing massive volatility within the markets. So how can we then capitalize on these potential moves? Well, first of all, EURUSD, guys. What are we currently seeing? EURUSD has continued its overall trend back in towards the upside, well within its overall impulsive phase. We've had an impulsive phase here in towards the highs where we saw a clear break of market structure, right? We shifted from that bearish market into a bullish market. The market then retraced into the 0.5 Fibonacci retracement level. It took out two major points of liquidity, this one and this one. And ever since that daily change of character took place here, we retested the overall sell down for the buy up. And yeah, since then we've been flying up higher, exactly as we discussed in these daily market updates. So what can we now expect? Well, the overall market structure remains overall here intact. We've had the overall, let's say, retracement phase, and clearly after grabbing liquidity and seeing that change of character, the two things that we need for the next impulsive phase to start, that next impulsive phase started. We've now seen a break of structure in towards the upside. And after a break of structure, what do we expect? We expect a new potential retracement to take place. You don't really want to be positioning yourself after a break of structure. No, you want to be positioning yourself within the overall orange zone once at least or at minimum liquidity has been taken out. So what we now want to see from EURUSD, and this is obviously kind of like the perfect world that we're now going to be discussing, but that is when we see a sizable retracement into either one of the major overall liquidity lows. Now we have two major points of liquidity. That is liquidity point number one, liquidity point number two. And overall, we're waiting for a retracement in towards that, the change of character to happen. And then we can take a long position on the demand that is then formed, confirming that that liquidity point is then actually a valid area to start buying. So EURUSD is a good buy still. And I'm looking now for that 0.5 fib retracement, tap into that liquidity, and then from there we can start looking for a long. If I'm not mistaken, that liquidity also aligns pretty nicely, and you cannot see it because of all of the zones, but here we have the yearly open and the 3 monthly open, so it aligns with the 3 monthly and the yearly open as well. So we're now overall looking for a retracement in towards there to then look for that next upside push on your USD. That is the main focus, the main setup at the moment. For the rest, there's nothing too much here on your USD. Obviously you should have been positioned within that overall initial, let's say, demand zone here. Myself obviously at the time being positioned over here, but being talked out of the position pretty much by different people, which I let's say took note of and journaled for myself. I shouldn't have closed that position. Again, on Friday I discussed it. Luckily I was able to capitalize on gold and yen pairs. But still, I had a very good position on your USD running from this low over here at the time with a stop loss around here. So is what it is. And regardless, price will never just keep on moving in a straight line up, except if you're trading gold. But now what we're going to be looking for is obviously a retracement into liquidity points, and then from there look for the potential long. And yeah, high probability play would come here from the yearly open together with that liquidity low. So let's see if we do get that, and that would be a nice potential trade to then trade towards these two equal highs and around 1.19189. Okay, but yeah, overall the buys that we've had since the beginning of the year is starting to finally come through. I was just slightly too early, I guess, beginning of January. I should have given it a little bit more time. But yeah, I mean, that's also the beauty of swing trading. And what I'm also trying to give you guys here, the overall direction, and the overall direction, as always, has pretty much now come through. So let's see what happens here. We can see some short-term downside, first. Moving on to dollar index, guys. Dollar index remains bearish for now. We're going to be looking for continued downside. It seems that we are now ready to keep on pushing down lower. We did take out some significant liquidity. If you do look at these ascending lows here, this picture perfect trend line, we've taken out the final point of that trend line and retraced into what is, let's say, this imbalance candle over here, which liquidated something here to the left. So this overall demand zone is not kind of like the opportunity or the place where you want to be selling the dollar, right? Because the dollar is trading as well after a break of structure. So now what you want to see is a retracement back up towards that yearly open, towards maybe this supply zone, maybe take out that high, and then you want to be looking for further shorts in towards the downside. Longer term, I do see there to be potential for the dollar index to turn around. But for now, on the immediate kind of like market that we're seeing, and with the immediate bias that I have, also fundamentally, it looks more valid to continue looking for sustained downside here from the dollar somewhere within that overall area of supply. That means, that remains the main focus. Going into GPUSD, GPUSD has reached that daily supply zone here at the top. Very impulsive push overall on Friday. Happy that I overall closed my short position out for a 0.5% loss. Extremely valid loss, happens, and yeah, sometimes it just is what it is. Took a loss here, obviously, and since then, well, obviously what we expected, because if you then see that the 4-hour market structure shifts bullish, then yeah, you expect that potential further upside to come into play and for a potential further push towards where then? Towards that overall daily supply zone, which has now happened. So what you now want to see is a turnaround potentially. And if I look at this price action here, there's not really a good opportunity to take shorts on GU unless the 4-hour time frame manipulates a little bit more, because we've had a 4-hour BOS in towards the upside here. We have some descending highs here. So you don't want to be taking a short. You also don't want to be taking a long because you're trading after the BOS. So potentially what could be better is wait for maybe one more liquidation up, then see the change of character, and then take maybe a sell back down to take out some past point of liquidity. Because overall the market at some point in time should make a retracement and at least towards around the 0.5 fips. So I'm preferring a setup like that. For shorts, there's just nothing really here just yet. But that short that I just outlined here on the 4-hour time frame, that could be valid because we're also trading in a daily supply zone with a daily bearish market structure. So keep that in mind, that could be a nice short-term shorting opportunity. Then going in, and then for longs, I'll focus more on EURUSD as the daily market structure is a lot more clear. Going into AUD/USD, AUD/USD still has some room for further upside, but yeah, this thing is just a rocket ship. Again, overall, the bias on AUD/USD continues to play out, obviously with the impulsive phase, and this is why the daily time frame is so important, with the overall impulsive phase just continuing, and even despite us seeing a break of structure here, the kind of like internals just remain bullish, so there was no reason to short it at the time. Yearly open sustained pushes up as well. Now we're very well within the impulsive phase, very well after kind of like this BOS line. So taking a long opportunity here or a long position here is extremely, extremely difficult. I'm just going to pretty much just wait for this overall swing high here potentially to be taken out, and then after that trade a potential retracement back in towards the downside. Other than that, obviously we've had a massive overextended move, so there's not really much that you can do in these kind of situations except wait for either, let's say, a weekly swing high to get taken out like this one, and then look for potential pullback after what has been a very, very expensive and impulsive move, right? Where we've left behind quite a lot of liquidity here, let's say liquidity here, and you cannot pretty much just buy here anymore because you're trading after the BOS on the daily, you're trading after the BOS on the 4-hour, and you're very extremely near an overall weekly swing point. So taking a long doesn't make sense, but trading a pullback and trying to call the top also doesn't make sense. So we need to wait for either liquidity to get taken, the change of characters, and then trade the overall pullback, right? So wait for that. Then NZDUSD. What are we seeing on that side? Well, NZDUSD in itself has pretty much replicated the move on AU. We never really saw a retracement that I liked into the overall daily supply or daily demand zone, right? And again, guys, the concepts that I teach in these videos, sometimes the markets will not really provide entries like we've seen here on these dollar pairs, but they then, for example, do provide entries on the yen pairs or on gold. So that's where you can then indeed capitalize instead of here. But we've reached an overall strong area of supply, so I'm very interested to see what the market does here. I'll be monitoring the 4-hour time frame. Obviously, the 4-hour time frame is relatively overextended, but we've seen the 4-hour BOS, we have seen the daily BOS, and we're inside daily supply. So now you want to see what we want to see on GU, what we want to see on AU. You want to see another break up, and then a change of character low get broken, and then potentially trade a pullback towards the first liquidity low. That's kind of like the game plan. And then from that liquidity low, we can see how the market reacts. If we then see bullish reaction again, then you could look for longs, or does it react bullish to that low, for example, or does it need to retrace even deeper? That's kind of like what you want to be doing in these situations. So yeah, that's pretty much that, waiting for that kind of price action. Then USDJPY. USDJPY has a lot more potential to fall a lot more with that potential intervention. Let's keep an eye. If I look back at 2024, I mean, the market also just started to go. I'm going to be doing some reading today, and I'll be sharing my findings with you guys inside Discord. So make sure to check it out. But overall, I mean, it does look good to start selling off. The weekly time frame has already seen a weekly change of character take place, which happened on this low over here. So now you have a relatively strong supply zone. Liquidated this, so any retracement into that weekly supply zone from there, maybe start looking for an overall sell. It wouldn't be a bad idea to start looking for sells on any retracement into that weekly supply, because you also have the yearly open there, and then stop loss maybe above the highs. And I know it's a 400 pip, but if you look at the previous intervention, there was a drop of around 2,200 pips. So the risk to reward is definitely there on a setup like this. And then if it does hit stop loss, then you just re-enter another sell position, something like this, because it's very unlikely that it's going to move any higher than that based on fundamentals. So I'm looking for that overall downside push there on USDJPY. USD CAD sold off as well last Friday with that dollar dump. It indeed appears, and sometimes you'll see this, that the very first liquidity point was already enough to cause the next sell-off. Obviously, we saw the breaker structure up, breaker structure down, and then liquidity point here, and then liquidity point over here. And this was kind of like your swing structure. Market didn't retrace, or did it? Yeah, didn't retrace the 0.5 fib, but took out that first liquidity point, and then from there it sold off. Overall, for now, just follow it down lower. Doesn't make sense to start buying this up. There's still quite some equal lows here as well. If you look at the daily time frame, it becomes a little bit more clear. So I'll be looking to target those, and any potential lower time frame shorts, that would be nice on USD CAD. USD CHF, relatively similar, sold off finally as well, kind of like out of this range, aligning with what we discussed over the time. I mean, we've always said that this was the daily BOS down, and then swing high, swing low, and then this the supply, and then this the internal liquidity. Obviously, we would have preferred to take out these free highs, but this supply zone was enough, and then from there we sold off. Though USD CHF was always a little bit rangy and not my favorite. For now, I mean, the move has happened, so it doesn't really make sense to get in. What you now want to wait for is just a sizable retracement and then get into a new short. So here we have now a nice liquidity point together with the yearly open. So let's say we do retrace in towards there. That would be the only opportunity that I would be looking for short. And then we have gold. Gold, you want to continue to buy this. Any potential retracement is another long opportunity. The last real 4-hour liquidation took place down over here back on the 16th of January. And since then, we've just been following order flow. So what I mean by that is, for example, here there was a little imbalance candle. Or instead of following order flow, we liquidated something on, let's say, the lower time frame. So, for example, if you look at last Friday, what happened is that we took out some liquidity underneath this bearish candle here, and then from there on the 50-minute time frame, there was a nice overall change of character, and then from there the market headed up higher. So get involved with those kind of positions. Gold looks good to continue pushing up higher, and any potential liquidation is just another opportunity to go long. Again, what did we see here? We saw a fake break, liquidation of the low, and then from there the market starts going again. So keep an eye on those kind of moves, and that's what you want to be trading. For me, gold is long only. It still has a lot more potential. Let's keep an eye on what the Iran situation does, and any escalation, any situation, kind of like developments in the Middle East surrounding like the aircraft carriers of the United States, that will push gold up higher. So gold is still just buy only. Same goes for silver, obviously. So that's it for today, guys. Thanks for joining, and wish you all a fantastic trading day.